Hello and welcome to the IMG Investor Webcast for Q4 2021 for Tapestry. Thank you for joining. We appreciate the chance to present a recap of performance and to highlight market conditions impacting your investment with us in Tapestry. We appreciate the chance to do this for the first time and look forward to sharing these on a quarterly basis throughout the hold period. The hosts of today's webcast are Michelle Rivnak, Managing Director of Asset Management, and myself, Dave Mickelson, Director of Investor Relations. In today's webcast, we'll cover the budget for next year, looking forward to the budget as compared to our original acquisition pro forma. As Michelle talks about operations, she'll provide some color into notable drivers that are unique to Tapestry in its property income and expenses, and how we're navigating those in the coming year to maximize yield to investors. In the second half of the webcast, I'll touch on some property highlights and give some perspective across the nation for what we see in the coming year, especially with appreciation rates growing and cap rates compressing, how that affects us here and how we approach that across the portfolio. This investor webcast and all the webcasts are designed to deliver you a high-level understanding of your investment with IMG. If you have any questions from the webcast material or you want to discuss anything that we don't talk about here, feel free to call or email me, and I'll look forward to the conversation with you. With that introduction, I'll pass the presentation to Michelle to discuss operations.
Thank you, Dave, and thank you all for joining us today. I will be reviewing our operations and would like to get started with our property reserves. Now, we put this into two separate categories. The top half of your graph is your owner-controlled funds, and we also have lender-held funds. We've got an operating account sitting with the property management company. The balance there is $806,377. And then we have a capital reserve account. The balance there is $777,424. That gives us a total owner-held reserve at $1,583,800. Going into lender-held funds, we have a replacement reserve. Now, this account is what we impound into monthly, and then we're able to draw on it on a quarterly basis for replacement items such as appliances, HVACs, things like that. That balance is $338,195. We also have a CapEx reserve with the lender. That amount is $774,170. And then a combined account with our real estate tax, insurance, and rate cap escrow. The balance there is $104,522. That gives us a total lender reserve balance of $1,216,887. Combining owner held with lender held, we have a total balance of $2,800,000. And that's a snapshot in time as the end of December 31st. You will see these account balances change quite a bit, and we go over this on every webcast. Moving into property operations, we've only had the property in our portfolio for a matter of months, so I'm going to compare our upcoming year. I'd like to look at the 2022 budget as it compares to the pro forma. We'll look at those two next to each other. We'll talk about any variances and any of the main drivers we see changing what we anticipated. Our gross potential rent, it's budgeted right in line with our expectation, 1% positive or $50,000. There's a very strong demand for rentals at Tapestry in that area, a lot of population growth and job growth, so looking really bright for 2022. Vacancy is slightly higher than we anticipated by about 30,000. That is going to be due to some home purchases. We have an extremely well-qualified demographic at the property, and their next step is home purchase, where we lose a largest number of residents. So as that happens, and then we will be doing some interior upgrades to units on turnover, and that will also take slightly longer than a regular make-ready. Looking at concessions model and other, we anticipate that to be pretty close to budget. We'll have a positive variance of 26,000 I don't think we're going to need the amount of concessions, so we should have some savings there. Looking at bad debt, we've got, again, a well-qualified tenant base. So we did close 2021 with $9,000 in accounts receivable. Now that amount sits on the balance sheet and is not shown as a write-off until the person moves out and we're able to gain possession of the apartment. But we only had $18,000 in the budget. Our bad debt and just the eviction process has been slower than anticipated. So we have that in there. However, just want to counteract that with the highly qualified resident base that we do have. They're very credit conscious and concerned about their scores. So there's a potential for savings there, and we'll see as the year goes through. Other income is not budgeted as high as pro forma. We don't expect the amount of late fees, insufficient fund fees, and things like that due to the seller demographic. So that'll be slightly lower. That brings our total income very, very, very close to pro forma. We are 1% off, $29,000. But the potential to collect the accounts receivable, reduce that write-off a number, and some one-time lease termination fees could possibly make that 1%. So we have a lot of operational levers that we'll be looking at as we go through the year. We're very close to our pro forma right there on the income side. Looking at the expense side, we were budgeted for $1,600,000 in expenses, and we expect savings there of about $63,000 or 4%. We do anticipate utilities to be about $40,000 under our pro forma expectation due to lower bill rates. So the amounts for usage just isn't as high. We have a slight savings in payroll there as well, which is not the case across the portfolio or the nation, but we have an excellent relationship with Lincoln in that area, and they have a very strong labor pool. So we were able to get some very qualified folks on our site team slightly under our budget. So we'll see how that goes throughout the year, which puts us at a positive net operating income from pro forma to budget of about $33,000, about 1%. Looking at our debt service. Now, the debt service interest rates are expected to climb. The timing of that has been interesting. So we're expecting that to happen in 2022 to be about $15,000 higher than we anticipated during the pro forma. That takes our net number. Our year one pro forma has us at net $1,340,000. We're budgeting to be $1,358,000, positive $18,000 or 1%. And just as a note there, that net number, that's used for three main items. It would supplement reserves. It's also used for the monthly distributions that are paid out. And then it would cover any capitalized expenses that aren't included in something that we can draw from. And that takes care of the budget review that you're seeing. We're expecting a very strong operation year ahead. The other topic that I'd like to speak with you about is our risk management. We've noticed that insurance has become the fastest growing expense across our portfolio. We've seen an average of 40% in uncontrollable expense increase. Some properties getting severely impacted, some not as much. There are four main drivers that we're seeing. Two are kind of environmental, they're national items. We're seeing that insurer losses have increased dramatically due to severe weather events, and then higher cost of construction, supplies, materials, shortages, things like that also make things more expensive. So insurance providers have increased their premiums to keep pace with those costs. On the other side, which would be property-specific items, rising property values, the more the property is worth, the more it costs to insure it. And then claim histories. We don't have any current claims at Tapestry. We're in good shape. But if there is a claim, specifically a major claim, that would definitely impact the renewal rates even more so over the last few years than we've seen in the past. Another insurance item that I'd like to talk about is renter's insurance. So each renter, as they come in the front door with their new lease, they're required to show us a renter's insurance policy of $100,000 of liability, and then when they renew, to make sure that they've continued to hold that policy. What we've done is we've increased that amount. It's just the same as the insurers are doing to make sure our losses are covered. If there was ever a resident-caused damage event, and that $100,000 just doesn't go as far as it used to, it's been an industry standard for quite some time, that this $300,000 would cover it. Now, it won't be a large difference to renters coming in the front door. It's only a matter of a few dollars per month per resident, but overall puts us in a better situation for risk management. And then just lastly, all of the insurance that we look at, boxes to check, the administrative side of it, we've brought in a risk and compliance coordinator to work with us full time. Excited to have an extra set of hands to get through all this paperwork and making sure everyone's compliant. So we're happy to bring him in. We just really want to stay focused on insurance, as it is such a risk item and very expensive. And that concludes my information that I have with you, and I will hand it back over to Dave to go through some business highlights.
Thank you, Michelle. Great to get the recap on the budget looking ahead and how we're doing with the acquisition pro forma. I know that this has been a great property addition to our portfolio and a market that we're really excited to grow over time. So thanks for that report. We'll all have the opportunity to talk about a couple performance factors. One is at the IMG level and how we operate as an asset management team, and a couple more within the market. Michelle started the conversation about the risk and compliance coordinator, how this person is such a great asset to tracking our insurance. First of all, making sure that tenants are in compliance, making sure we're getting good value for our insurance dollars. Another couple of great additions that we made to the asset management team last year: one, an additional asset manager, and then two, a project accountant who is dedicated to the capital expenditure budget tracking, evaluating the returns on investment for the CapEx that we're doing, and then also in charge of making draws to the lender for any kind of impound accounts that they control. For example, the replacement reserve, drawing from that. So for us, these investments in asset management are really a key for our business and a key for making these investments operate the way that we believe they can. The value that you receive as an investor, you get value when you make a good purchase, you get value when you operate well and execute on a solid business plan, and then you get value when you sell the property and withdraw your owner capital or your owner equity from the deal. So for this whole period that we have ahead of us, really rely a lot on the asset management team. They are providing leadership and guidance to the staff on the site and to our regional property management company there in Greenville. So love to see the growth of that team and the expertise there. Greenville as a market has been fantastic for us so far. We've accomplished some of the rental growth that we'd anticipated for the first year, and it's a market that I think has legs to keep on going with some really positive rent growth. You can see here a metric of 13% rent growth on new leases. That's very supportive of what we're doing there. We believe we can also add to that with some of the light rehab that we do. But also know that on the new leases, that 13% growth, that's kind of the top end of what you'd expect to get on a lease, because the other, call it 50% or maybe 60% of your leases could be lease renewals. And on the lease renewals, you typically don't push as hard on those rental increases. You want to move the rents towards market, but you still don't want to go so far that you drive that tenant out. So there's some kind of blend between renewal leases, which would be in the mid to high single digits, and the growth on the new leases, which might be about 13%. So that's kind of the balancing act that Michelle and the property management team do as they evaluate the velocity and the new people coming into the property. This property, Tapestry, we began distributions at 5.62%, right on budget. at our annualized rate last year. That's been a consistent distribution every month over the hold period, and we'll look forward to continuing those at that rate into the near future. As we approach the 1-year mark, that'll be a time to assess again our reserve balances, and if we've got surpluses in our operating reserve, that would be a point where we would either send out extra distributions or increase the distribution rate and try to come as close as we can to hitting and exceeding that year one cash on cash pro forma. So we'll communicate more with you on that point through the course of the year and look forward to some really good performance as reflected in that 2022 operating budget. And finally, to wrap up and kind of provide some perspective from what we see as a sponsor, cap rates across the country and cap rates in Greenville have been compressed, which is great when you're a property owner. It means accelerated appreciation for the asset, but it does make it challenging as a buyer because as cap rates compress, yields or returns also compress. So that was a trend that has been going on for the last year or so and has kind of accelerated over the last 3 months. So as we enter 2022, we're seeing cap rates in the mid to high 3% up to 4% range. What that means for us to be successful going forward with our acquisitions in the future is being disciplined in how we underwrite, making sure that we're conservative with estimations that we're making for rent growth and appreciation growth. It also means being creative in the way that we approach markets and approach acquisition opportunities. I think 2021 is an example of how we got more creative in how we approached acquisitions. We made 7 acquisitions across the country. Tapestry and Greenville represented a new market that we entered last year. And also we sold 4 deals at an average return of 22%. So going forward, our emphasis will still be on finding those markets where we don't feel like the bidding has made them overheated, where the values still make sense, where there's still renter affordability. And sometimes that's smaller markets like Greenville, markets that have economic fundamentals that kind of position it well for future growth, but maybe haven't picked up the attention of national investors, and we don't see a whole lot of kind of frenzied bidding activity. So we've looked at other markets in South Carolina already, looking at markets in Tennessee, North Carolina. We'd love to be in some more metros in Florida, and we've reevaluated some acquisition opportunities in the Denver and the Pacific Northwest markets. Those are markets where we already have assets, but just haven't been as active lately as we've been more focused in the Southeast. So we'll look forward to producing some really exciting and I think competitive options, investment options for you in the coming year. We'll keep you up to date with those with emails. And if you're in an exchange or you've got some other investment questions that are unique and you'd like to discuss, please send me an email and we'll make sure that we're communicating through the year. I'd expect our next offering comes out in February. We've got some leads that we've got staff looking at this week and some offers out. So fingers crossed, we'll have something to show you and talk about more in the month of February. Well, we appreciate our partnership with you in Tapestry. Like I mentioned, this is the first webcast of many to come, and in each of these webcasts, we'll cover some different material, offer some new insights into ways that we're looking at the market, ways that we're approaching asset management, things that we're doing to create value through the business plan. And so in addition to being informative, I hope they're educational, and we're bringing up some new things that you learn a little bit every time you're with us. We'll look forward to keeping you updated through the year. Look forward to a very positive year ahead in performance for the property. Our next Investor Webcast will be Q1 2022, and that'll be presented at the end of April. This will conclude our presentation for Tapestry. Thanks again for joining. Have a great day.